recently we've seen gold has rallied significantly. One of the reasons for gold to rally was very high demand from central banks, and the gold market was in sort of a balance. Demand and supply were in balance, slight deficit. The demand was higher, supply was lower, and but there was no investment demand. 1.5 years ago, or roughly 2 years ago, central banks started buying gold for whatever reason. Now we have more reasons to talk about. We have war and tariff wars and other sorts of wars, which tell us why central banks bought gold. But these are all post facto justifications. 2 years ago, we did not know why they were buying, but they bought, and gold prices went higher. So the price sensitivity, because of that investment demand, helped gold prices to do what they did. Now look at silver. In case of silver, there is a 5-year deficit in demand, in supply. Sorry, demand is higher than supply, and currently the net physical investment demand for silver is just about 200 million ounces. If that number goes up for whatever reason, the market will become even more tight. So from a demand supply perspective, the market is tight, right? Now, when you compare silver to gold, it is trading at a very, very favorable point where the ratio is at about 100. I'm sure that there are a lot of questions that why this ratio cannot be 200. Yeah. So you can think that it can go to 150. Nobody can stop it from going to 150. But in the last 100 years, it hasn't gone to 150. It has been here. So what can we make out from this ratio? What we can make out is that we are not buying this ratio at 40. So we are not in the opposite end of the cycle. We may not be in the best phase, right? We have no clue how to make out what is the best ratio or what should be the number. But historically, the average has been about 60 to 65, right? Currently, it's at 100. If that ratio goes to 60, 65, then silver prices have a lot of room to rally, right? Currently, they are 32 to 33 per troy ounce in the US market, dollar per troy ounce. According to our theoretical calculation, when you look at the gold silver ratio, prices could be upwards of $50. So there is a lot of room. And in most bull markets in the past, silver has rallied more than gold.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.